Good morning, everyone. How are we doing today? You guys have a good weekend? Good, good, good. Okay. Well, overnight inventory. It's 100% short. And the Globex bid is down here at 73.91. Uh, Tight profile. And when you look at it on the 1 minute chart, you'll just see back and forth between 74.08 and 15. Not really that much going on. Let's see. We can just trade it back and forth. Now for our traders who are looking for the big short, everyone's always looking for the big short. We're going to have to get under 73.91 and stay underneath it. To get any kind of a gap fill, you're going to have to get down here underneath 73.47 and then under 73.25 to get into that gap. That's quite a ways away. So for now, generally what happens is markets gap and then they go sideways and distribute until we load up enough people with inventory that you get to move down when they get trapped. But the last couple of times we've gapped up, we had a big gap up, right? Went sideways. And what happened? That sideways motion brought price stability, so people came in and bought the market and it was bid. So that could happen again. We're getting, I know everyone says it's too high and it's overvalued and all that stuff, but thing is, the market doesn't really care about your terms. Everything's about supply. And the only way we're going to get any kind of a decent liquidation is if we get enough trapped longs and no upside, right? There's just no way to get this thing lower. Because yes, markets are different than stock markets because there's no dilution. They're not diluting the product. What does that mean? Dilution means that when I'm running a stock, right? You guys, I'm going to go through this a little bit because it's kind of slow and it's kind of important that you understand how markets work. When I'm distributing a stock for clients, what that means is we're creating a chart, but the clients own all the stock. So they'll own hundreds of millions of shares of this stock. But we will only release a little bit of it at the time, which means we control the supply. Then once we've taken the stock higher, then we start to distribute and sell into it. Right? Now, this happens on smaller time frames, but it's not like anybody owns ES at like 500 and they're selling it here at 7,400. And that's how stock markets work. Now, larger companies like, Apple and Microsoft and those sorts of things, that's not how they work because they're more closely aligned with large institutional investors who hold for decades. And that's how that supply is controlled. And they're not diluted because they don't need to sell stock to fund the company. They have earnings. So in this market, and I know you guys are lost now, in this market, there's no dilution. When there's no dilution, there's no, not someone's not going to just come along and sell 500,000 contracts just out of the blue, right? Where that will happen in penny stocks and even small cap stocks, right? That doesn't happen in these stocks. So that is a very, very different dynamic. And that's why people keep getting trapped short and trapped short. So it's like even tonight, you know, we opened, you guys would call that a gap, where you open under the previous session close, right? When you open under the previous session close, we had a P profile on Friday. So the shorts were trapped under 74.06. We went all the way down here, and this allowed the shorts to cover, at nighttime, right? Now, here's the question. Is all the cheap supply bought? Can we get back down to 74.06? Let's just take a look and see. Okay. So London's going to open in 6 minutes. I did up a balance zone, right? You can see there's the gap down. There's really no back and forth here. There's a small balance zone here, a really small one here. So I used this distribution balance right here, right? I'm using this. And you double it to the upside to 28, double it to the downside to 73.95. Now, let's see. It's not quite getting down to 74.08. Did a little look above and fell of 74.15, and right now we were smack dab in the middle of the zone, so there's no trade. So how you save yourself a bunch of heartache in this business, right, is what you do is you don't trade the middle, right? Hey Jerry, how you doing? So what we do is we wait for this trade or this trade, right? We always want to trade from the edge. You don't want to trade from the middle. The middle is for wholesale. The edge is for retail. Does that make sense? Do you guys get that? I've been trying to talk about edges and why you trade from the edges. And if I just say, make it simple, right? The middle is not for retail. The middle is for wholesale, right? So right now, this is wholesale business. This is where retail can do business. See, look below and fail, look above and fail, right? Simple, right? It's not rocket science, right? Right? Yeah, what I'm trying to do, Dave, is I'm trying to keep, and I know this is hard, and I've had big debates with trading psychologists on this. I believe, because I worked in the industry, that people can learn how to do something without bankrupting themselves, right? The common misconception in retail trading is that you have to lose a lot and you have to blow up accounts and you have to you have to do business like a nutcase and just ruin yourself in order to learn. Now, if that was the case, wouldn't you think that it would be difficult in real business? Like imagine if you owned a business and you said, I'm going to open up this business and I expect it to fail and lose a whole bunch of money, right? Yeah, or if you're a truck driver, I'm going to drive this truck off a cliff and then I'll buy another truck and start again. Right? I own a gas station. I'm going to blow up my gas station and then open up another one. Right? I'm going to open up a restaurant and I'm going to poison all my customers and then I'm going to open up another one. Why do we take this stupidity and apply it to retail trading? This is what I don't understand. Right? And, like, why do I have to blow up accounts to learn? Why can't I learn to do? That would mean that Goldman Sachs would have to blow themselves up to make money. JP Morgan would have to blow. You don't see that happening in the real world, right? It just doesn't exist. It only exists because people love this, oh, it's not my fault. You're supposed to blow up accounts. It's natural. It's not. That's not good business, right? That if that's the way the world operated, we wouldn't really get very far, right? Yeah, now let's see what happens as we come up on 74.15. So remember, overnight inventory overall is short, okay? So another clue was when J period opened, it went straight up and created the new overnight high. K period took it out and straight back up again. So the market is bid, okay? The market is really bid. It's bid here in the eights, I mean the nines and tens. So what does that mean? When London opens, let's see where the London low is. The overnight point of control is, what is that? What are we at here? 74.11 half. Let's see if when L period opens here in 30 seconds, if we can get down to 11 and a half, right? Because that's where the position is. This is the time, this is the position, right? Time point of control, volume point of control. All that means is it takes time to sell or distribute. What are we distributing? The cheap stuff that we bought down here earlier on in the session, right? So here we go. Let's see what happens. It might be a slow session if we're stuck in the middle of this zone, right? London always likes to come a little lower and try and get some cheap inventory. That's what generally happens. So here we see there's a seller just here. You see the seller? I haven't taken a trade yet this morning, so we're sitting here, we're watching. You want to mark off where the sellers are. So now you're trying to build situational awareness, right? Which means you know what's going on. You're aware of what's going on. You're aware of the business, right? That's trading involves retail trading involves a huge amount of situational awareness, right? You have to know where the buyers are, where the buyers are, and that's where the sellers stop selling. Because when sellers see large buyers, they stop selling and they raise price and they try and get those buyers to pay up. Make sense? If sellers start competing, they'll lower price and the offer will start moving lower. Yeah, and you're right, Raj. Blowing up an account, that's a business model for these funded accounts because people just pay to reset. So let me ask you guys, do you see a trade? Remember how I said let's see if London can get down to that point of control at 11.5? There it is. Yeah, no trade, right? There's no reason. This is just a wholesale business. And I'll explain what's going on. The wholesalers who are long here just sold it here, right? So that's all that's going on. There's nothing, they're able to buy contracts and sell them, right? Just back and forth, right? So what I want to do is wait for an edge. The edge is where you get the best deal. The edge is where you get the best short and the best discount if you're buying. That's why you wait for an edge. There's an actual business reason for taking a trade at the edge. So when you don't see an edge, you automatically should relax. And once you relax, you don't have that pressure to take trades. Once you relax, you don't have that pressure to push yourself, to get yourself into bad situations because you're desperate to make money, right? A desperate trader is a dead trader, right? Always remember that. Just like a desperate salesman is a dead salesman. You'll never sell anything from desperation. You'll never make money trading desperate, right? So what we do in our trading room at Trading Syndicate is we teach you how not to be desperate, right? We teach you how not to be ruled by your emotions, right? We use trading psychology in a practical way, and we combine trading psychology with the way the actual business works. So it's not hard for you, because a lot of these guys and, a lot of people are like, oh my God, I've got bad FOMO, or I've got to do this YOLO trade, or I've got to do this, right? Once you understand that's just stupidity, like if you know something is stupid, you're not going to do it. But if you're not aware that doing something just doesn't make any common sense, would you do it? Would you like sit on a bunch of dynamite and pick your teeth with a kitchen match? Would you be like spraying yourself down with gasoline and then lighting cigarettes? Right? So once you understand that certain things just don't make any sense, you'll avoid doing them. I hope. I don't know, you guys are quiet, so maybe not. So what we try and do is we try and combine practical trading with practical trading psychology. Trading psychology should not be you sitting on a couch talking about your childhood, okay? Trading psychology should be, okay, this is how the business works. Oh, that would be a bad decision to do that. Okay, great. Now I don't need a psychologist, right? I just need to be aware. Oh, am I thinking, oh, I really need to take, oh, I really got to make some money. Rent is coming up. I got to pay my rent. I got to pay my rent. There's no trade. All I'm going to do is lose money. Why would I trade? Right? If you understand how something works, you're far less likely to make bad decisions. See, like, look, how simple is that? We know that there's a seller here. We marked it off 8 minutes ago. And look, that means the sellers are competing here. Let's see where they stop selling. It'll probably be 11, right? And if the sellers don't stop at 11, they will sell down to 10 and then 9, right? But for now, we're completely relaxed. right? We know that there's going to be good trades later on. Right now, maybe not so much. This way you can just kind of relax. You know, it's amazing. When I started retail trading in 2012, you know, I talked to these people and they were like, "Yeah, I just had 3 Red Bulls and a whole bunch of coffee and I'm amped. Let's go, let's go, let's go." I'm like, "Where are you going? There's nothing going on." Right? Now let's see if we see how they're putting it on sale underneath 11. See, it's the trading the 10, 10 3/4, 10 half. Let's see if we can get a 10 and a quarter and 10 print. It's so much better trading at an edge because you can see where the orders end. In the middle, it's so hard to see where the orders end. Yeah, and VWAP, even like look at 5 o'clock here. We did a look below and fail. Couldn't get down to VWAP, right? So VWAP is here, and there are buyers stacked up here. Like you could think of these as bids, right? And you don't need a DOM to see them. You just see the bottom is the candle is where the sellers stop selling. Why would you stop selling there? Well, because people are willing to pay more, so you raise the price. See how simple it is? It's simple and everything is just common sense. You don't really have to kill yourself with indicators and all this stuff. Just look for where the buyers stop selling, right? That's where the buyers are because they're trying to coax those buyers to pay more, right? That's all it is. It's just commerce, right? And this works in equities, it works in any kind of financial instrument, right? Because sellers always want to try and get more for their product. And if they see people lining up, they raise price, right? So that's the thing about this market. You know, this market it's not like when you go to Walmart and it's a fixed price. Okay, this TV is $500 or this couch is $2,000 or whatever it is, right? The market, that's why they call it an auction because the prices are moving. They're constantly in motion, right? See how we came down to the 74.10 area? And then all of a sudden, magically, the price started going up, right? The offers started to lift. Now let's see if we can stay above 11 and 3/4. Watch the red line on the candle chart and watch it go up and down as it's trying to get buyers to pay more. Now, of course, if a whole bunch of sellers come in and start selling 11 and a half, one will go 11 and a quarter. And then if everybody starts selling 11 and a quarter, one will sell 11. And price will start to go down. And they'll go down and then they'll find those big buyers under 10 and then they'll try and move up and get them. So it's a constant back and forth. It's like a dance, right? Now, what that means for you is just leave this alone. There's no reason to trade this because there's no edge, right? Because you don't see any clear direction here, right in the middle of a zone. And that's why we do these balance zones so you can tell when to trade. You know when to trade because, oh, I'm a retail trader and this is when I take trades. This is when my edge occurs. Okay? If my edge isn't there, and what's an edge? What's an A plus setup? An A plus setup is simply all it is It's a clear business plan. There's a clear type of transaction that I do. When the market does the look below and fail, I wait till it goes under, comes back up. I buy, put my stop underneath the level, put my sell orders out, and sell into strength. This is how I do business. I don't do business just at any random place, right? If my setup's not there, if the trade is not clear, if the business reason is for me to take this money and enter this transaction, if that's not there, if it's not clear, there's no reason for me to even bother, right? And the reason why I'm harping on this right now is because it's slow, and it's this market, well, quite honestly, this market's not going to get any easier to trade. I kind of predict it's going to be a difficult trading year, right? You know, we have an ongoing war. We have all sorts of news coming at us. You know, I told you guys in December that the new year would be very difficult and it would be challenging, and it has been, right? You can tell because people come into the trading room and they just disappear, right? You know, because this is not an easy business, right? It's a simple business, but in challenging times, retail trading is one of the hardest things to do. So come into our room and let us help you, right? Let us help you. It will, you know, if you're serious about this, it's not going to cost you a lot. It's only 20 bucks, you know? And now, you know, at the end of this month, Steve's starting that contest. So those who are good, you know, who are doing this well, you know, you do have an opportunity to win money, you know. There'll be a $5,000 prize giveaway this coming up month. You know, if you, and if you're interested in those kinds of things, we can teach you. We'll teach you how to trade, you know. Reach out and, you know, give me a DM. And if you're interested in coaching, reach out to me as well. Right? Now look at this. You know, it's really slow, but still look. The sellers were here. Guess what? Now they moved here. See? So the range is getting smaller, right? So the range, you know, it goes from this, then it goes to this, then it goes to this. That means business is getting slower, you know? The smaller the candles, the slower the business. The slower the time and sales move, right? The slower this moves, it just means the business is slower. This is like a speedometer. If it's moving quickly, business is more active. If it's moving slowly, if it stops and starts, it means business is slow. Very simple concepts, right? Very, very simple concepts. Now that you can see that the sellers have moved from here to here, now they've moved down here. Those bids under 10 are still there because they stop and they move. Now it's getting into ultra chop, right? So that's even less reason to do business, right? You guys all get this? I know it's not very exciting, but what it's going to do, this is going to save you money. You know, if you can't make money, you might as well not blow it, right? And wait for opportunity where you can make money, right? There's no reason for you to just needlessly throw money away, you know? There's no reason for that at all, right? And that's the thing, Ian, if you guys always kind of revert back to doing dumb things because it's a discipline thing, right? And you always have to remember that it's a business. So are you making a good business decision or are you just bored? And if you're bored, go to the gym, make a coffee, take your dog for a walk, read a book, watch a movie, right? But don't get bored with your cash, right? Because then you get irresponsible, right? You know, if you want to be irresponsible, go grab your motorcycle and go drive fast, right? But don't be irresponsible with your money, you know, because that's just a recipe for disaster, you know. And that's where trading psychology should come in. You should be able to catch yourself. Like sometimes, you know, sometimes it'll be, oh man, I haven't taken a trade all day. What's going on? You know, am I being lazy or is there just no setup? Then I look at the chart and I go, oh, there's nothing for me to do here. So I'll go work on, you know, some consulting or I'll do some teaching or I'll go to the gym, you know, work on my book or something like that, you know. So there's always something else to do that's more productive than losing money, right? Don't default to the I have to trade, I have to trade, I have to trade. Especially when there's no trade. Like look at this, right? The chart's becoming like a barcode on a box of cereal now. There's nothing there. There's no opportunity for you at all, right? You know, there's absolutely no opportunity for you to make money in this. So as soon as you see charts doing that, your brain should just automatically relax, right? Once you relax, everything becomes easier, right? And you're not pushing, and you're not desperate, right? It's a slow Monday, that's all. And that's okay. It'll get spicy later, right? It takes time to learn the business. Do you know, Ian, when you started a brokerage firm, right? A lot of people think, oh, I'm on a trade desk at a brokerage firm, right? You don't get to trade. You sit there next to a senior trader. I mean, this is in the old days before, you know, quants and math guys. You'd sit next to a senior trader and get him his coffee and his lunch, right? You don't get to touch anything. They don't they don't give you capital to risk, right? You're an unknown quantity. They want to look and see how well disciplined you are, whether you listen. Do you do what you're told, right? That's why a lot of people don't last even more than a week on a trade desk because as soon as they exhibit like any kind of behavior that is at all risky, they're gone, right? They do not tolerate that kind of behavior. It's a very strict environment. You are there to service your clients and make sure, yeah, yeah, and you guys are like, oh yeah, I'm gonna make, you know, because it's bad, Ian, because it's the marketing, you know, brother. It's the marketing. They market to retail traders like, oh my God, you're gonna step in and you're gonna make $1 million the first day you do this. Just buy this course, right? They don't tell you that retail trading is one of the hardest jobs in finance, right? They don't tell you it takes discipline and learning and watching and being aware of your emotions and monitoring not only the market, but you have to monitor yourself. And that's why I came up with this 5-step program where you take trades, right? Yeah, not every day is a trading day. Some day there's, it's like, you know, if you've ever gone fishing, sometimes there's no fish, right? It's not your fault. You go, there's no fish. That's just the way life is, right? So just relax. It's 8:30 in the morning here now in the UK. It'll get a little busier. We're just in the beginning of the month. We're coming up to mid-month, you know. And the other thing, folks, is trading all-time highs is not easy, right? So what I'm looking for is just back and forth action here. I'm looking for 73.91 to be tested in RTH. If we can't get underneath 73.91, we will just go, actually, we'll probably just go back and forth like this. I haven't looked and seen what kind of news. Do we have any news today? Any big news this week? Let's take a look. Today we've got home sales. Tomorrow CPI. Wednesday PPI. Retail sales on Thursday. May 20th is the Fed. Yeah. Nice and slow. Time to go to the gym. Okay, anybody have any questions? No? Yes? Maybe? No questions? Okay, I'll let you guys go a little early. Go get some sun. Hey, the sun just came out in Liverpool. Perfect. Perfect. Have a wonderful day. We'll see you at 9:15 a.m. Eastern Time, 2:15 UK time for the next session. And for those of you who are on the fence, we've got a 3-day trial at Trading Syndicate. Come give us a shot. Love to talk to you. If you guys need me, I'll be around. Have a wonderful day. Bye for now.